Yo, what's up, everybody? It is Monday, November 28th. I hope everybody had a nice Thanksgiving. I did. So, we had a sell-off in the market today on, well, a couple of things, but I'm gonna mainly put this on comments from St. Louis Fed President James Bullard. Of course, there's also stuff going on in China. Protests against the COVID lockdown policy and stuff like that. I think the markets came in a little bit weak based on that, but it looked like, we were getting some recovery. And then Bullard came out with really hawkish comments. He's a guy, and I think I've done a couple of videos on comments that he has made in the past. I really wonder about how much he understands. And I'll explain the reason why I wonder about that. So today he said, and he's the guy who's really been pushing on the hawkish argument. I mean, he's been a staunch monetarist hawk. He keeps talking about we need ever higher interest rates. And, today he's saying like we need to go like in the range of 5 to 7% on the Fed policy rate. And the markets are underestimating how much more we have to do on rate hikes to deal with the inflation situation and So very hawkish comments coming out from Bullard. Now, the reason I say I don't think he understands is very simple. Because if you do the math, and it's not very complicated, and if you take a 7% policy rate, and if you take 25 trillion outstanding in U.S. government debt, that's the amount held by the public. I mean, there's 32 trillion total, but the other 7 trillion is what the government, government agencies hold. So let's go with the amount that the public worldwide holds, 25 trillion. 7% comes to 1.75 trillion annually, and that's a minimum, okay? Because you got to think that some of these coupons on the longer dated instruments, when they get issued, they're going to be at an even higher rate. They could be at an even higher rate than 7% if you assume like a positively sloped yield curve. But let's just go with the 7%, okay? That's almost $2 trillion annually in interest payments that the government is going to make into the economy. Now, let's do another simple calculation. That the government now, just its annual spending approaches 7 trillion, a little bit less. Like last year was 6.9 trillion. We might come in this year at 6.7 trillion. Let's just round it off to 7 trillion. Now you're going to add another 2 trillion onto that. So that's 9 trillion in annual spending. And the interest income, I haven't even mentioned, the discount that you get like on newly issued securities like T-bills and some notes and some bonds and like TIPS, those Treasury inflation protected securities. So you're talking about if the Fed goes up to a policy rate of 7%, I mean, you're literally talking about upwards of 9 trillion annually, maybe approaching 10 trillion of annual spending, okay? And remember, this is spending, I mean, it's just literally handing out money, okay? This is exactly the same thing as sending out checks to people. Only basically you're sending out checks to people that already have money. But it's like another COVID stimulus on top of the stuff we already had. So we're talking about 9 to 10 trillion annually at that rate. And by the way, that would be sustained for many, many years because, again, as new securities get issued, new 5-year, new 10-year, new 20-year, new 30-year, that interest gets paid over the life of those securities. So like we're just ramping up to that right now. And I can tell you that just to get some perspective on this, just this fiscal year, which we're into it like 2 months right now, not even 2 months, October, November's not even over. We're almost 30 billion additional interest paid on just the discount on T-bills and other newly issued securities. And we're up about 11 billion year over year now on interest on Treasury securities. So that's like 40 billion in not even 2 months. We're already up, and it's just beginning to ramp up. So this guy, let's break it down. Okay, you have this guy, James Bullard. He's the president of the St. Louis Fed. He's on the FOMC. He's a very vocal guy, very vocal, hawkish. And he's saying, I want you people to understand this, okay? I'm gonna say this in the simplest way possible. He is postulating, he is saying that if the government's gonna spend 9 to 10 trillion annually, okay, we're talking about an additional 2 to 3 trillion more than what's being spent right now. And let me just say, and I think you guys understand this, that this is not spending on new, real capital. Okay, we're not spending on infrastructure or manufacturing plants or equipment or real assets. This is just checks going out. This is just money. This is money printing. If you want to use that term with the monetarists, this is money printing. And somehow that is going to squash inflation. I mean, this is literally what this guy believes in his head, where he's saying right now, we need to get spending up another 2 to 3 trillion annually. Like I thought these people were saying leading up to this whole inflation thing, they were saying it was the spending. But now he's literally saying, and I don't think he understands this. This is why I'm saying I really question how much this guy understands. Because he's literally saying now we need to spend another 2 to 3 trillion handing out money. Again, this is not on the creation of new assets that could benefit, productivity and economies of scale and efficiency and all this stuff, and lead to the creation of more supply. If that were the case, if it was the creation of more supply or more productivity, then you really wouldn't have an inflationary problem. But it's not what's happening when they raise interest rates. It's just money. It's just money going out. It is the classic proverbial money printing. And he's literally saying, and I don't think he realizes it, because if he realizes it, like what rational person, I ask you people, what rational person in such a high post, who has basically his hands on the controls, him and the rest of the committee, buy into the idea that by raising spending annually 2 to 3 trillion, they're going to squash inflation. I mean, the claim, the assertion is so ridiculous and so idiotic that it's basically, it's comical. It's transparent in its stupidity. Like, you really have to wonder. I mean, again, I've said this so many times. All these guys and women, they're highly educated. They went to all the top schools, okay? They're in circles with other people who are highly educated, who went to all the top schools. But this is literally his position right now. Now, if this were to happen, and it seems like, he's an important voice on the FOMC because, his voice is not being squelched. I mean, you're not, Powell's not saying, hey, Jim, cool it a little bit on the 7%. No, I mean, crickets, they're letting him say this. And so, this would be inflationary to the nth degree. This would be inflationary through the stratosphere. You're talking about a situation, and basically, what do I feel about this? I'm like, Jim, bring it on. bring it on, because, you know, we will make so much money out of this, because you're going to see commodity prices rise, you're going to see oil prices rise, you're going to see gold and silver prices rise, you're going to see industrial stocks go through the roof. I mean, this is an easy play, you know, if he really goes through with this. And it does sound like that's their belief. And the other thing that I have to mention, which I've spoken about many times in the past, you know, and this is no secret. I mean, on the one hand, you have a situation like Japan, where the Bank of Japan has maintained zero or negative rates, and inflation is very low in Japan, despite the fact, I have to say, that Japan is totally dependent on imported energy, on imported oil. Okay, they shut down their nukes after the Fukushima reactor disaster, after that earthquake back in, when was it, 2011 or something like that. And they're totally dependent on imported oil, and we know that the price has shot up, and yet inflation is very low and stable in Japan. So on the one hand, you have a situation where you got the Bank of Japan keeping interest rates negative, actually, and very low inflation. And then on the other hand, you have examples like Argentina, where interest rates are 75% now, and inflation is running at 100% annually. And here are these guys and women on the FOMC, and these examples are right out there in plain sight. Okay? Everybody could see these things if you choose to open up your eyes, and if you choose to let go of your dogma, of your, you know, this kind of like myopic belief system that you've programmed into your head, and you feel like you have to stay married to this. I mean, we have the evidence right in front of us. They have the evidence right in front of them. At the very least, you would wonder why they wouldn't question their assertions, and why they wouldn't question, hey, how come we're not seeing hyperinflation in Japan? They've been maintaining low rates and doing quantitative easing for years now, in the trillions upon trillions of yen. And how come we have skyrocketing inflation that continues to accelerate in places like Argentina, for example, when they've raised rates, who knows how many times at this point, but it's 75%, and that's not doing anything. Like, I ask you, wouldn't a rational person, and I know any scientifically minded person would question the thesis, would question what they're doing? I mean, because you need to see some empirical evidence that supports your theory, right? I mean, that's just a scientific method. But no, they don't do that. They don't do that. And then you have this guy. I mean, this guy basically can't even understand a simple arithmetic. I mean, I'm no math genius, but, you know, I can multiply 7% times 25 trillion, and I could come up with 1.75 trillion, okay? And I know that's the addition annually, for starters, that the government's going to have to pay on top of what it's already spending for its, you know, annual operational budget. And to say now that, hey, if we add another 2 or 3 trillion on top of the 7 trillion, that's going to somehow solve inflation, when you're not, that spending is not going toward in any way the creation of new physical assets. Come on. I mean, you know, they all went to Harvard and Yale and Princeton and Wharton and all these top level schools, and like, you can't figure this out? Or you don't want to. You don't, you know, because that would, you know, that would put you in contradiction to the orthodoxy that has become embraced. And I always talk about this. It's an orthodoxy in the way they think. It's an orthodoxy in the things that they believe in. And in order to stay in that clique, in that group, You cannot challenge the orthodoxy. You have to stay within it. And even if it doesn't work, you can't change it. You have to double down on it. You have to triple down on it. So I say, Mr. Bullard, bring it on, because we're all going to make a lot of money. You know, the few people who watch this channel, and again, it baffles me, like I have like no viewers basically. The few people who watch this, we're going to make a lot of money. So bring it on. Anyway, that's it for today. See you tomorrow. Bye.